Okay, MegaWhale team, welcome back to our channel. Thanks for tuning into today's video. We have a lot to talk about, guys. What a reaction we have seen in the market today. Wow. CPI came out 8.3, 0.2 higher than the predicted, 0.2 under the last previous result, and we have seen a significant pullback in Bitcoin, a huge crash all the way down to sub $20,000 from around 22,800. A huge 14% crash in a very small period of time. We're going to talk about all of that today. More specifically, we're going to talk about why the market crashed. We're going to be talking about the result of the CPI. We're going to be talking about how the result of the CPI is going to potentially impact the FOMC interest rate hike on the 21st, because that is undoubtedly more relevant, more important, and more significant for shaping the economic environment in terms of risk asset prices. The interest rate hike will have a larger and more profound, prolonged effect on the prices of cryptocurrency than the CPI. So very important we understand what's happening there, and we talk about that today. We're also going to talk about the macro environment in terms of the price, the short term, and everything in between. Let's go ahead and dive into it, guys. Without further ado, we'll get into it. But before we get started, guys, head down to a pinned comment, click the link, join our Telegram channel, get access to all our updates, analysis, and more. You can see a couple of things in here already. If you want to get access to our VIP channel from the 1st to the 12th of this month, rate 20 trades, 17 wins, 3 losses, huge profits, but many more trades in the meantime between this after this was posted. If you want to get access to that, join the Telegram channel, click view message, and you can contact me by clicking here. Make sure you are in the correct Telegram channel. Down below in the links, don't join any of those scam ones. There are a couple of scam ones of people impersonating me. Make sure you double check your links before joining anything. Let's go ahead and talk about CPI to start off with. So CPI, and you've heard it many times, came in 8.3. 8.3 was higher than 8.1 and lower than 8.5, right in the middle. And we talked about the potential issue that this would bring forward if we were in the middle. And we discussed this in our last video. I think it was 2 days ago or day before yesterday or yesterday, whenever it was, that 50-minute video. We talked about it at the end. And we talked about it in regards to two things. More importantly, and which was discussed at the end of the video, was this chart here. And we used systematic risk, the chart, to describe how the CPI release will impact the market in terms of short-term direction. Over 8.4, 8.5 plus, we expected a very bearish reaction. Under 8.1, we expected a very bullish reaction. We then talked about the issue of which would happen if we saw CPI come in between 8.1 and 8.5, which is exactly what we saw. And that issue was that markets front run based on systematic risk. More specifically, they move based on perceived systematic risk. So even though that was a 0.2 drop from the previous 8.5, even though it was a drop, even though it's come down, all inflation CPI has come down, we still saw a very bearish reaction because the market was anticipating 8.1, and therefore the increase to 8.3 was perceived as bearish, and thus the perceived systematic risk increased and the market tanked. What does that mean for us? Well, let's take a look, because we've got the data over here. And why is CPI important in the first place? Because it's going to tell us or give us an understanding, or I guess a good guess on what the Federal Reserve will do with interest rates. Because at the end of the day, like we said at the start of the video, the interest rates is what matters. The interest rates, the response to inflation, is what impacts the prices of assets. How they go ahead about bringing interest rates up, whether it was 0.5, 0.75, a 1, that change, those numbers directly impact the actual systematic risk in the market, and therefore directly impact the asset prices over a prolonged course of period of time. So the CPI is now telling us what happened, what the market is expecting. Basically what we did, we priced in 0.75. We expected 0.75, everyone's expecting 0.75 now, and it basically overcorrected. I think the market has overcorrected. That is me personally. I think the market has seen an overcorrection because the news actually wasn't terrible. It was short-term bearish. It was perceived as bearish because it came in over the anticipated 8.1. But overall, if we look at a broad spectrum of things, it came lower. It came lower. So it's going to be interesting what to see. But this is a chart that shows us basically what people are expecting in September, the September meeting, in terms of how the Federal Reserve is going to increase their rates. Are they going to bring it up 1.75 or 5 increase? And we can see over here where the blue post-CPI, pre-CPI, September 6th and 12th, these are the data points we can see on the chart over here. What we're seeing now is post-CPI. We can see post-CPI has almost turned 0.5% into an infinite, it's not going to happen. No one is now expecting 0.5, all right? Pre-CPI, it was slightly higher, it was sitting around 14%, but now that has dwindled down. And as you can see, as the month has gone along, the expectation of 0.5 has dwindled. It has dwindled. Now, what is increasing? 1. Before CPI, no one anticipated a 1. Everyone was anticipating 0.75. Post CPI, people are now around 40% of people expecting that post CPI interest rate hike in September to be around 1%. And as you can see, the cluster, the majority is kind of sitting in the middle. The market is more or less anticipating 0.75. What can we derive from this? Well, we already know that if it comes in at 1, it's going to be uber bearish. Incredibly bearish. We will see asset prices tumble. We will see a prolonged crash, most likely making a new low. Very important. If we get 1, we're most likely making a new low. The macro environment is incredibly bearish and we continue downwards. If we get 0.75, I think we could have a mixed reaction. We'll have to assess it as it comes. If we get 0.5, obviously that is incredibly bullish and we should continue upwards. Let's talk about the price action because we've talked a lot about that now. Hope everyone is on board with that. Hope everyone understands what's going on. We'll obviously touch on this stuff when we get closer to the date. But the recent crash, guys, has sent Bitcoin underneath that macro 9-year trend line again. Obviously, it feels like a never-ending story, doesn't it? It feels like every other day we're above it, we're below it, we're above it, we're below it. And now we're just kind of freaking testing it. We're acting like it doesn't exist anymore. We're just floating around it, up and down, over and over. And obviously this is not a good sign. It is obviously not a good sign when we get these strong trend lines, we start testing them and rejecting and testing and rejecting. It weakens them. It weakens these trend lines. We can see how these trend lines are becoming weaker and weaker as we're jumping around them longer and longer. So it's not a good sign. But in terms of macro, everything else currently remains exactly the same. And we're going to go ahead and take a look at this chart and we'll go zoom out to explain that. Then we'll take a look at the short term. So forgive me, my chart is messy. I do a lot of scalp trading on Bitcoin, so I've got a lot of lines going on, a lot of zones I need to keep an eye on. Few things, we have a few different trend lines. We have our macro descending channel over here, and this is our primary bear market trend line. We have our short-term impulse trend line, which will flip us into a nice little uptrend, which is a trend line we actually got rejected on, which is this trend line over here. We can see we actually pushed upwards and got rejected off this trend line over here. And obviously, we got a few other lines in here, which we'll discuss in a little bit. But first and foremost, let's go ahead and identify the major zones. The major zones are the red line. This is our bull market trigger. We flip that, we enter a bull market. Our gray solid box over here and here, there's a major rejection points, and our major support zone, which is underneath us, is gray solid box again, okay? So the current price is still above our major supports. It is still underneath our major diagonal resistances and major horizontal resistances. So what do we anticipate to happen, assuming the bullish case scenario? How could we see the price flip bullish? We need to see a few things. First and foremost, for us to have any shot at continuing upwards, we need to clear this zone. We need to clear this level here. We talked about this in the last video. If the price is able to clear this level here, we have a very strong shot at pushing again. We would have pushed through this trend line here. We'd be pushing upwards to retest the bear market descending trend line. If we break out of the bear market descending trend line, the bear market is over. We start a new trend, Now, whether this be an uptrend or a downtrend, again, it poses the question, but we will start a new trend pushing upwards into these zones and vice versa, okay? Very simple stuff. Let's talk about the downside, but the downside is more important here. Now, I don't believe we will create a new low currently. If 1% comes out by interest rates, I think we got a chance at losing this line. I do not think this zone will be lost unless we see a significant pump or interest rate hike. I don't see it happening. So if we do lose this level here, I do anticipate Bitcoin to come down to our low targets, which were $12,000 to $13,000. That is our worst case scenario, $12,000 to $13,000 if the the interest rates come out at 1%. Until then, the bottom is technically still in. This is the bottom here. It is the bottom until it's not. So this is the bottom for now until it is not, and that will continue that way until proven otherwise. So as sort of macro guys, again, not much to talk about. We are in this weird position again, just underneath the 9-year trend line, still in the bear market, still haven't broke any macro uptrending, downtrending resistances, still didn't clear any major horizontal levels. We just saw this pump upwards to the uptrending diagonal support line of our macro ascending channel. We got rejected from that level and we've pushed back down again. That is all that's happened, nothing too intense. The only thing about this is scary is how quick it happened. It's not that we're back here. We were basically at this price again around the 28th of August. So we've been at this price for a while now. The only thing that scared people is how quickly this has actually occurred. So let's talk about the short term, because the short term is very important. I want to keep today's video nice and short. I don't want to go into too much of analysis today. I just really wanted to give you guys an update on the CPI. As you can see, we took a nice breakout trade this morning over here, targeting these two red levels. We got our first target, about 178% profit for Bitcoin. But as we can see, we are bouncing from our support line, which was extended from our pennant formation. This is our pennant formation. If you remember us talking about it, we saw that support line over here. We bounced from that support line, extended. Now, the only thing is, and again, sorry for the messy chart, I've just got a lot going on in this chart for other means of trading and all that kind of stuff. We can see that we are underneath now that major trigger point, which is this level over here, which is a 20,500, 20,600 level, okay? If we are unable to reclaim this level, we will head down. It looks like we retested it. We will head down. If we lose this trend line, we are heading back down here. All right, it's as simple as that. If we lose this trend line, we are doing exactly what we saw here. Maybe not as fast, but we will most likely head back down to this range here, okay? The range being 19,000 to this green level here, 18,600 support, okay? If we break above this level, we can see a nice rally back upwards. Again, these red lines are our targets. 21,200, 21,600, 21,800 zone is that main target if we push upwards. So keeping it nice and short and sharp, that is what we're looking for. Now, what should you be doing right now? And we've been saying this for the last few weeks. Do not over position yourself right now. A lot of people are thinking, wow, you bought $18,000, you're over positioned. Well, first and foremost, I bought $18,000 in June. I've been at massive profit. I took initial profits, and that first 21% pump, we actually sold everything over here and rebought back at $18,000. So I'm actually up 20% on my purchase, 21% on my purchase, and my re-entry is around 18,600 overall. And I only bought 30%. I'm still massively out of the market. The main entries on the market should occur, like we said, when the macro reverses. When the macro reverses, you do not try catch the bottom with large quantities of money. That is how you get trapped in a market. Be very, very careful. Although I do anticipate the bottom to be in, I'm not going to take the risk of putting all my money in on a whim, on a speculative estimate based on historical price action, because we are very much aware of the risks of the current financial economic situation and potential threat of raising rates going forward from this point. So be very, very careful, continue to scalp trade, continue to swing trade, continue to acquire as much capital as possible, stack your positions if you want with your profits, but don't be putting too much into long-term positions right now, okay? I'm gonna keep it there, guys. Keep it nice and short video. I'll catch you guys tomorrow for a more in-depth analysis. Of course, we'll have a little bit more data on the charts then, and hopefully talk about exactly what's happening with the price action. Again, today I just want to jump in and do a quick update because I was busy this morning and talk about CPI, talk about FOMOC, and talk about the interesting stuff there. That being said, guys, I'll catch you tomorrow. Cheers. Okay, guys, we're going to be taking a quick look at Bitget, and now Bitget is where I personally trade. I highly recommend signing up to Bitget with the link down below. Bitget is probably the best exchange out there if you are a trader. It has a variety of features, and the best things about Bitget are a few things. Number one, it's non-KYC. Well, KYC is completely optional in Bitget. Now, there's a whole variety of exchanges out there nowadays that have gone completely centralized, sharing your personal trading information and information of decentralized governments and different governing bodies. Bitget allows that option to be left to the individual, to the user of the exchange. You can decide to non-KYC, you can decide to KYC. It's completely your choice. Another really beneficial thing about Bitget, and the biggest reasons why I'm sitting here actually recommending Bitget to all my followers, is that it has 0.02% trading fees. All right, this is significantly lower than any other cryptocurrency trading exchange out there. FTX, Binance, Can name a bunch more. KuCoin, it is significantly lower, by 500% lower than the lowest exchange out there, Binance. Another big thing, guys, is there's no global restrictions on who can use Bitget. Anyone from anywhere can sign up to Bitget and get access to the entire exchange of all the tools, whether it be futures or spot. No matter which country you're in, you can use futures and spot. If you're in America, for say, and you want to get access to more spot trading pairs, such as Binance Global, and you can't sign up, well, guess what? They've got 250 different spot trading pairs here on Bitget to get access to, and you can get access to all of these. If you're in Australia and you want to access the futures market and you can't trade futures, you can do it here on Bitget. You can get access to the future market and start trading with leverage. And finally, guys, if you do want to sign up to Bitget, go ahead, click that link down below to sign up to Bitget, and you'll get access to the reward center over here, which enables up to $4,000 in rewards by completing 5 tasks. All right, guys, we'll get back to the video. Thanks for listening to that. Okay, guys, I want to take a quick moment to introduce the Become a Trader course at the end of this video. This course was designed by myself and Wolves of Crypto. We put together a whole variety of knowledge to create the most cohesive, understandable, and beneficial trading course there is on the market. If you're interested in learning how to become a trader, if you're interested in learning how to use technical analysis, if you're interested in learning how to apply market analysis to different cryptocurrencies, this is a course for you. We teach you everything from the fundamentals, the basics about what cryptocurrency is, how to trade cryptocurrency, mastering the craft of cryptocurrency, diving into a whole range of technical indicators, market structures, and teaching you how to utilize these when finding trades and applying risk management strategies to become more profitable over time. We even dive into market psychology, human psychology, and provide a variety of different videos and educational content, including courses and quizzes to assist your learning along the way. If this is something you're interested in, guys, go ahead and contact us down below at the cryptoacademycourses@gmail.com. We'll send you an email back with all the course information, the structure, the payment details, and everything else you need to know. That being said, guys, I hope you enjoyed the video today, and we'll catch you in the next one.